All right, what's up, everyone? So, today I'm going to talk about 401ks and why it's necessary to retire and use a 401k. Now, there's different type of 401ks, and before you pick one of these retirement accounts or anything like that, please talk to a financial advisor. Now, I have a Roth IRA, I have a 401k, I have an IRA, and I have other a HSA account. So I do have these other different type of retirement accounts. Now, let's talk about what is a 401k. So a 401k is named 401k because of the IRS tax code. So it's named 401k because that's what the IRS calls it, and that's what the tax number is, or the information on it. You can look it up. But simply put it, a 401k is a retirement account that a employer offers you. So not all 401ks are the same. So off of Fidelity, right? So Fidelity 401k, depending on your workplace, y'all might use Fidelity. So 401k is a retirement savings plan that lets you put a portion of each of your paycheck into it, and you get you do not pay taxes whenever you put it in on that income. So what does that mean? That means if you put $10,000 now into it, you do not pay taxes right now, but it will have to pay taxes later on whenever you try to withdraw it. So that is the importance about it. Now, taxes are very important because it helps fund everything, but what does the 401k helps you do? So it helps you save money and avoid paying taxes now. So the best way I can put it is whatever money you put now, expect to be taxed at your normal level income in retirement. Most people income in retirement is nothing. They don't have an income. So that's why you set up a retirement account. Now, what what is the benefit of 401k and your employee? Well, they're all different depending on your company. Some places allow 6% match, some places do 3%, some places do 2%, and they'll do 100% match or 50% match counting on your salary. Now, that's the benefit. It's free money. So, the exact match formula can be very depending on some of the employers. They might do dollar to dollar, or they might do 50% at a 5 or 6% contribution match. So contribution limits is all set by employers, and you really can't do much about what you pick in there. So what is the benefit about choosing a 401k over the other one? There really isn't much of a benefit picking a 401k or IRA besides the match. Besides everything else, the match from your employer is the main contributing factor. Now, the takeaway here for if you can do a 401k instead of a Roth is you are going to set yourself in a different taxable account. So a Roth IRA is a account that is taxed now but not taxed later. So contributes are made with after tax dollar, but withdrawal and retirement are generally tax free. And a traditional is contribute may be tax deductible and earn growth tax deferred until withdrawal. So until you withdraw it, you will be taxed. Now, there is difference between 401k, 401k, 43B, and 457B, but they're generally the same because a 403B is a employee public, school, and nonprofit organization. 401k, it's just the normal one. And 457 is the government. Now, there is stuff like the simple IRA, SEP IRA, solo 401k, and spousal IRA. But unless you're going to get deep dive into 401ks and all that stuff, you really don't need to worry about. The main point is, what is a 401k and what are some of the cons to it? So some of the cons to a 401k, it is limiting your investment choice because you only have the choices that are allowed from your employer. Your employer will pick general, hey, you can pick these 20 stocks or 20 mutual funds, and that's all you can choose. That kind of sucks, but hey, that's how it is. Now, another thing people need to understand is the fees. If you're in a 401k, they do charge fees. And some of them are very high, so you need to pay attention to this because with that match, it might barely offset due to high fees because 1% fees, 3% fees. This is for your account. Either it does good or bad. And the tax implications it can cause you could be an issue if you are in a higher tax bracket when you retire, which you could be because you have a business or you have a passive income and your early years you work and you put on a retirement account 401k, and let's say it grows to 500,000. Well, if it grows to 500,000 and you try to take it out, and whenever you originally started working you're only making 60,000, and then when you retire and in your retirement you have your business going, you make 200,000. Well, now you're going to get taxed at that 200,000 range, and that is an issue you might run into. Now, there's an early withdrawal penalty. That's another con. Access your funds before retiring age can charge you 10%. And lastly, employers control your plans. You can't pick anything. So that's why, I don't like 401ks as much because I don't have much controls and the fees, and it's a prediction game on how much money you are going to be making in retirement. Now, most people don't make money in retirement, but people who have their own business, people who do consulting on the side, people who do flips of furniture, flip of product, sell on eBay, they might have a higher income in retirement. Now, is the 401k match for employers worth it? Yes, because it's free money. Now, what else about 401ks? Well, let's talk about the pros of it. The pros of a traditional 401k is, you save on your taxes now. So you can use your 401k and do it's called a backdoor investment or a Roth. So you could change your 401k to a Roth and not pay taxes. And it's called a backdoor Roth conversion. And what it is pretty much you have a traditional IRA and you convert it to a Roth IRA. And then you have to pay the tax implication. Now, if you work for an employer and you save $40,000, $50,000 in a 401k, and then you leave it, you can convert it into a backdoor Roth so you don't have to pay taxes later on it. I have done this. So you contribute to a traditional IRA and take the deductions. And then whenever I left my company, I get to take that fund and put it in my own Roth IRA. Or I can put it in a traditional IRA. I put it in my Roth IRA, and now I might have to pay $20,000 to $30,000 worth of taxable income on it. but I can offset that with my taxes. And that's just something you have to talk to a tax professional, and it is a way you can do it. Now, your 401k, you know, with a traditional route with a 401k, it's just a employee benefit. So should you take a part of it? Yes, you should take a part of it and do the match at the bare minimum and then invest in your Roth IRA on the side, because you are allowed a maximum of $500 or $6,000 a year. So how much can you put in a Roth? Let's see. So how much can you put in a Roth IRA? So let's see. To a Roth IRA. Let's see how much you can convert. So typically, there's no limit on the amount you can convert. So I have done it already twice. So the trick is I go work for a company for 2-3 years, put 5 or 10%. And then whenever I have time, I find another job and I take it and I convert it into a Roth IRA. Now, is it a good idea? Well, let's first look at what's the taxable implication on it. Well, your taxable income for that year, it adds it to your income. So if you put $50,000 into your Roth, you are now taxable income for that year of that 50,000. So you have to figure out what is your tax for the year, and if you convert it where you don't get a income tax that year, you can convert some to your Roth IRA. That's what I have been doing. Instead of getting an income tax a year, I convert it into a Roth. And it's a very fine line and it's a balance you need to take care of, but it's not the best thing to do. Now, what is a IRA or a 401k? A 401k, back to what I'm saying, it's just a tax code that the government used to give people the capability to retire later on. So, is it a good thing to have? Yes. So, why choose a 401k? You choose it because you think you're going to make less income in your retirement than you currently are making now. That's why you choose it. Now, how much you put in there is all determined to you. I generally put the match and then put my money into a Roth IRA. So, what are some of the good points about contributing to a 401k? So, the good points are they have great flexibility in contribution, and this is according to the IRS. Employees may contribute more than plans under the IRA plan. Good plan if cash flow is an issue. You can have an option to take a loan from your 401k. I don't recommend it, but you can if you hit some hardship. Now, the needs of the benefit do not discriminate in favor or highlight compensation employer. This test can be complicated. And additional withdrawal and loan flexibility add administration burden for the employer. So the 401k is a pretty good retirement account. I recommend everyone to have one, but this is up to you. Now, individual arrangement, I recommend if you have a more of a knowledge of the stock market, you can do it. Now, what other retirement avenue can you do? Well, you can either own a business and use that to help you fund your retirement, and that's one way. You can own stocks. That's the second way, and that's generally where you put in the 401k. And the thirdly is you have to get real estate. You know, so that's the three ways people use to retire. So we talking about right now the 401k stock avenue, which is a good avenue. Now, not everyone do it. Some people put all their money into real estate and use that as a retirement because they got rental income and they either pay it off or they make so much on the profit they can retire or they have plenty of properties. Now the business portion is the harder one to do. Is you have a business and you have excess funds that you can pay yourself and not really be part of the business. And that's a great way. But the likelihood of it failing is very high too. So those are the different types of retirement. So if we go over you can own a business. That's one method to retire off of. You can own real estate. That's another method to retire from. And then number three, you can own stocks. And that's what people use for retirements. So one of the avenues to put it in is your 401k account, which a employer will give you. Now, thanks for watching my video. That's my 401k and the pros and cons about it.